I've been seeing a lot of articles written, Axios, Jonathan Swan, and others, not just about the Senate, but about the House as well. Nancy Pelosi can't lose a lot of people in the House either. And we had Josh Gottheimer on last week saying unless there, and Tom Suozzi, both said if there's no SALT repeal, they're not going for this. Is this going to be doable, Senator?
Well, that remains to be seen. Raising taxes is generally not a real popular issue for the American people. You look back in 2017, we worked hard to cut taxes and unleash the economy. My colleagues across the aisle, the Democrats, they've most recently now unleashed big government with this massive spending and now proposed tax hikes. The bottom line is tax policy is a means to an end. Cutting taxes helps us become more globally competitive. It creates incentives to reinvest capital and grow businesses, create jobs, increase wages. The bottom line is Republicans want to drive more tax cuts. Workers win with that. As you saw the data, and you can look at various studies, but we've seen wages go up as a result of the tax cuts. In fact, 2019, we saw 6.8% growth in median household income. That was the largest one-year wage growth in the history of our country. And so this is really about global competitiveness. Notice inversion stopped. Inversion stopped when we cut corporate rates.
Senator, what about a 25%? That's what we're hearing, that Senator Manchin or there could be some, I don't know whether he's a Democrat, obviously, but would any Republican go for anything above 21% if there was a compromise that was put on with some, I don't know, something that Republicans want involved in there as well? Would you ever go back to 25%? Could you support that?
Yeah, well, no, I don't. I don't support that. And here's why. Now, what's on the table now we're hearing is taken to 28%. Let's put this in perspective. An increase to 28% in the corporate tax rate, that would raise the U.S. federal plus state combined rate to over 32%. That'd be the highest in the OECD and highest in the G7. So this is about global competitiveness. If we want to talk about keeping capital investment in America, creating jobs here in our country, we've got to have competitive tax rates. So even going from 21 back to 28, remember we were at 35, take it to 28, add the state rates on there, puts us the highest in the OECD. That's not the right thing to do.
Right. Well, I asked you about 25 because at 28, they're saying that there may be some a place for people to come together at 25. I don't know whether that.
Well, here's the other point, though. It's not just the corporate tax rates. They're looking at raising the estate taxes as well, and the pass-through rates. These are the LLCs and the S corps. And you look at the economy and the engine that drives it. In fact, there's more on the pass-through side than on the C corps side. And so they're looking at tax increases across the board, not just on the C corps rate.
Well, if we just spent $1.9 trillion and you're looking at the potential of another 3, or I've seen parts of the Democratic Party say that's not nearly enough, and they want upwards of 5, 6, 7. I've seen $8 trillion. Would you not raise taxes anywhere if you were going to spend it, or you just wouldn't spend it?
Well, no, it's a spending problem there. I mean, we've pushed nearly $6 trillion of COVID-related spending in the last 12 months. Now add another, $3 trillion or more? They're talking about massive spending increases, high tax increases. This is a recipe that's going to take us to a bad place in our economy. And so this is the fight right now. And it's very, very narrow. It's 50-50 Senate right now, narrow margins in the House. This will be an interesting battle. But I can't support these massive spending increases, and looks to be perhaps massive tax increases as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.